If we look at GDP and the inflation numbers, if we use the same math and formula that we used back in the 80s under Reagan, I think we'd have different numbers. So it's hard to kind of figure out what's real and what's not a little bit. And that's the most unnerving thing when we're looking at all the debt, all the other issues that we're facing right now.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Well, we just got a surprise GDP print of 2.1%. Happy days are here again. Will the Fed use it as a pretext to raise? That remains the question. Eddie Siddell has the answers. Eddie, great to have you back on. So,
hey, thanks for having me.
So what about this number here?
Not surprising, like we were talking about just a couple minutes ago. I'm not shocked. I think a lot of people are, it's with the dollar, the math, none of the math is making sense. I mean, when you think about with BRICS, the US dollar now, increasing in value, from where it dipped below 100 to, I looked earlier today, it was 104. I'm not exactly sure where it is right now. None of the things are making sense except for what Powell said. Not so much that it made sense, but he's already kind of pigeonholed the Feds and what the monetary policy is going to be, because he said he's going to hold true and fast to that 2% mark. And so if he does that, that means there's going to be a 25 basis point raise and maybe one more, even though it's lagging. But again, if we look at GDP and the inflation numbers, if we use the same math and formula that we used back in the 80s under Reagan, I think we'd have different numbers. So it's hard to kind of figure out what's real and what's not a little bit. And that's the most unnerving thing when we're looking at all the debt, all the other issues that we're facing right now.
Yeah. So do you think that really gives them a basis, if you will, to raise rates? Because look, the 2-year is well ahead. It's at the Fed funds rate is well ahead of the 2-year treasury, which they've been begging. So the 2-year the 2-year treasury is down at like 485. Maybe it's gone higher after this number came out. I haven't seen it yet, but that is the question here. Is that going to lead them to raise rates again, or do they just leave it for the time being and hope for the best?
Whether they raise it 0.25% or not, the market's already kind of priced it in a little bit. The market's reacting to the not as good news for the GDP number. So it looks like we could finish another positive day for the third day in a row for the markets. But I would be shocked if the Feds actually pause and don't raise rates. I think if they pause, it's going to inflation is going to come roaring back, and it's already here. I mean, look, we're spending over $5 billion a day. It's actually more than that. If you go back and you look at when we actually broke 32 trillion in our national debt, it's been roughly 75, 80 days. And at that rate, we're going to overspend. We're going to have deficit spending in excess of $3 trillion a year. That in itself is inflationary. I think the other things that Powell is looking at, it's wage increase. You've got these large unions that are renegotiating contracts, for increased salaries and wages. And so that's creating a lot more upward pressure on inflation. So I think he's looking at everything as a whole instead of just, the Fed funds rate at 5.5 versus the 2-year treasury. I don't think he's going to put a whole lot of stock into the GDP number being 2.1%. Honestly, I think he's going to be looking at everything. And if he doesn't, inflation is going to come back. The big concern for me is how long are we going to keep rates where they're at? And is the election next year going to be a determining factor that says, you know what, let's go ahead and lower rates one time? Because, James Carville said it best, right? It's about the economy, stupid. So I think they're looking at this, even though they're trying not to be political. I think they can't help but be so.
Mm-hmm. All right. So you think it's going up then anyway, because they got a free ride to do it because the market's been going back up. And so he's just going to do it. But really, are they really shooting for 2% inflation here, Eddie?
I don't know how they're going to do it. It's, more than 1.25 below the 100-year average. I mean, I just don't see how it makes sense. And if they do, and they keep pushing it, they're going to have to raise rates to a point where, it could wind up breaking the economy. You've got debt at all-time record highs across the board. I mean, credit card debt is over $1 trillion. You've got revolving debt, over $1.3 trillion. Student loans are coming due October 1st of this year. People are going to have to start making payments on it. We're getting a lot of jobs that are coming out, but they're mainly in retail and the service industry. And, we've talked about this before. In my opinion, I think those are more, second and third jobs. They're definitely not those high-paying career jobs that most people are looking for to provide benefits. So I heard a phrase and I really like it. It's called the Silent Recession. I think that people are feeling it right now. The pain at the pumps. They're struggling to pay all their bills at the end of the month, and I think we're in for a long haul. I do.
Okay, so the silent recession, maybe it's not as silent as it appears. It appears that it's here, and hey, if a tree falls in a forest and nobody hears it, did it fall? Right.
That's right. That's right. And that's the thing, because everyone knows when they go to the grocery store. I'm a treasurer for a charity, local sports club, and the cost of food, when we're feeding the team is 30% higher than it was last year. So it's across the board. And then you have to pay for the gas. There's all these things. And when you extrapolate that out, and then we're talking about the, everyday American family, it's a struggle. It's a day-to-day struggle, day in and day out. And that's why I call it the silent recession, because it's here, but no one's really talking about it.
Mm-hmm. So what do you do here as an individual approaching retirement at some point in your life? How do you prepare for this awful series of events here?
You know what? Hedge your bets. Excuse me. There's a lot of risk-off investments. The 6-month, 1-year treasury. You've got a lot of money market CDs there. Now is the time to take advantage of it. I think September is going to be volatile. I do believe that the year is going to finish up strong. Why risk it if you don't have to? I mean, there's enough places to shelter your money. And again, we talk about it all the time. I'm a fan of precious metals, gold and silver. It not so much as an investment, but as a storage of value. The investing part would be the mining stocks. So, and again, have that as a small portion of your portfolio. But yeah, you've got to hedge your bets right now.
Mm-hmm. So hedge your bets and get ready for the inevitable, huh?
I think so. When I say inevitable, I don't think it's going to be a crash landing, but it's going to be here to stay. I really believe that, for at least in the near term.
Okay, so what? Anything else in particular you're doing to personally prepare for what's coming?
Yeah, what we just talked about. I still utilities were hit really, really hard as of late. Fuel, gas, energy. I think that those are some pretty good plays right now. Those sectors, healthcare. But again, it's hedging your bets. The majority of the portfolios that we have across the board are in those short-term investments that are risk-off type situations where we're generating a good rate of return for not a whole lot of risk.
Okay, I like it. And hey, Eddie, Appreciate you coming on, sharing your wisdom with us about the latest GDP print, and it's enlightening. Where do we find you? How do we connect with you on the web?
EGSIfinancial.com. That is the best place to find us.
Okay. And the links in the show notes to this interview on financialsurvivalnetwork.com. Make sure you go and you sign up for our free newsletter. If you got a question or comment, shoot us an email. We'll get you an answer, kl@kerrylutz.com. Eddie, always a pleasure. Thanks for stopping by.
Kerry, I appreciate it. Thanks. Have a good one.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.